Week 1 is here, the first week of 2024. I hope you had a very good Christmas, have been relaxing among friends and family, and are ready for a new year. You are listening to the StockInvest.us podcast Trading Tips with Jim as we head into the 5th season of this podcast series. Yes, for 4 years I've been telling you what I think will happen in the market in the week ahead of us, in the year ahead of us, and often years ahead. I've been speaking my mind, telling you what I think, and the fact is that nobody really knows the future. I was very lucky about inflation, I was very lucky about the interest rates and most of it, but last year I started to fail a bit. One of the big wrongs was of course the Taiwan conflict, which I thought would come by first half year of 2024. It did not happen. And by the end of the year, I told you, I've seen this before, Nasdaq can just continue to push upwards and upwards and upwards. Usually is that the statistics always say that the end of the year is good. That is more correct and more true than false. And indeed it was. Nasdaq did 9 straight weeks of gains by the end of 2023. I thought there would be a correction among these 9 weeks, but it didn't happen. Nasdaq just pushed upwards and upwards, making a total gain for Nasdaq for 43% for 2023. It was indeed a super year for Nasdaq, and especially for the Magnificent 7 stocks, including AI stocks like Nvidia, among others. Dow Jones also had a good year, up 24% for Dow Jones. Now they are hovering back to all-time highs, and the question is, what will 2024 be? And I will dedicate this first season podcast talking a little bit about what I think will happen. I will dwell with some thoughts I have, so you can understand what I think when I say that I will reduce my exposure in the market. And many of you who've been following me through all these years knows that I never, I invested fully when the frantic sell-off during COVID was. I invested as the market was falling down. I invested till I reached 100% investments into the stock markets, and had a super upturn, started to sell out as Nasdaq got higher and higher, and in the end, and all last year I was floating only between 30 and 40% investments into the stock market. Yes, in the retro perspective you can say that I should have been much more invested. As we know, Nasdaq was up 43%, as I just said, but most of you probably didn't think, so how could Nasdaq go up 43% and my portfolio or your portfolio did not go up as much? It is because it was mainly driven by selected stocks and you had to be in the big ones. And that is a general lesson. If you want to avoid the biggest swings, stay away from the most risky stocks. But most of you don't have the capital and you play for the risk, meaning that you go into stocks having way too high risk, and very often you end up in a losing streak. And many of these stocks, they did not do the full rebounds like many stocks did in January. Many of these stocks are still held down, and some of them even went bankrupt, like Bed and Beyond. Now, what will I do? Well, I will actually reduce my exposure in the stock market more in the year ahead. I will explain why as we move forward. First off, you may wonder, so what do you do with the rest of the capital? Well, some is in the bank. I've been sitting with too much cash in the bank. Another mistake I made, because I knew inflation would continue, and inflation just eats up your capital. It should be invested somewhere. But it was such a busy year with so many things happening that I didn't have time to fully think where I wanted to be. But as you know, a few years ago I bought into gold because I wanted to make sure that a part of my capital would be secure no matter what happens. And that has been a very good bet. Gold, when I bought gold, it was around 1600. Now it is 1600 and up. I started to buy gold. And now it's sitting at $2,084. And I think gold would just continue upwards. I personally will increase my gold holdings over the year as I will slowly sell a little bit out of my positions in the market. And you know, I've been very high into oil. Started to pick oil at $20 when oil was $20 and waiting for one last upturn. But I reduced my portfolio a little bit, but still have some oil stocks. But now I will slowly start to go out of these as well. Oil sitting at $73. It's been major global fight all year for oil. US emptying their strategic reserves and OPEC cutting their production, trying to force oil price up, US trying to force oil price down. So far it's been more or less even fight. Oil was up at 95, been pushing down to 73, so in some way you can say that it's been a correct choice selling the strategic reserves. But the question is, what will the cost be of refilling the reserves back? And why do you want to refill the reserves? Well, as you know, green was the big word for many years, but green is no longer the biggest word. The reason for this is that everything with all the Russian sanctions backfired, just as you heard me say. Backfired heavily, causing huge inflation. I told you that would happen, and interest rates being hiked in very fast pace. All of it backfired. It hasn't done what they hoped to do, and it will not do as they hope to do. The only thing it's done is pushing the world more apart. BRICS building up stronger, and you heard me talk a lot about BRICS. I will not talk so much about BRICS in this podcast, but you have to understand that the world has been much more divided in 2023 than in a very long time. And that being with the US president that told that he would do anything to unite his people, unite the world. Everything has going in the opposite direction. The world is really falling more apart. And two big strong economies are building up. It's the BRICS on one side and it's the US on the other side. The US and the Western Hemisphere on the other side. In some good way, Argentina did not join BRICS, or postponed to join BRICS. Argentina got a new president, and he has really been slashing and cutting into the government of Argentina. And we know the liberals went just crazy when he was elected. We will see how that will turn out. But he did this move that West seems to like. He postponed joining BRICS. The BRIC thing is much bigger than we think, because trade is starting to move much more internally in Asia, and we need all these Asian goods to keep prices down. We produce cheaply in Asia. Yes, we moved a little bit away from China over to India, producing more of the goods. We know Apple moved some of their production, etc., as a political move, but it's still coming from Asia. And Asia is doing another thing. They are investing heavily into gold, trying to move away from the dollar standard. And I think that will be one of the main topics of 2024, the dollar. And that is one of the reasons why I move into gold, because dollar is under pressure. Dollar went super strong, was 95 to the euro. Currently gone back to 110 against the euro, weakening more than 15% of the last half of the year against the euro. And this brings me into the big long lines, because no matter what we do, we have to try to figure out what will be the main drivers of the year and try to position ourselves accordingly. At least I do like this. At the same time, we do understand that nobody really knows the future. It may be totally different than you think, and it usually is. But here are the two main things that I see as we move forward into 2024. On the negative side, let's start on the negative side. We know that US is borrowing an insane amount of printing, and it's escalating at a super pace as we speak. That has to be paid, and now, if I'm not mistaken, US pay more in interest rates than the military budget, and it just keeps increasing very fast. Soon, US will be paying more than the Medicare budget in just interest rates on all the money they've been printing lately. And that has to be dealt with in some way or the other. Either you grow your GDP so you can afford paying down, or you do other fiscal things trying to reduce it. They have a lot of techniques in their toolbox. At the same time, you have to cut your spendings, but we know that Democrats love spending. And just as an example, you heard me say that the job numbers have to go up. There has to be more unemployment. Unemployment rate has to increase because of how the companies are making money. They make less and less profit margins. They are cutting, everyone is cutting, but still job numbers are very good. They are at 3.8% year over year. Yes, they increased a little bit by the end of the year, but they're still very strong. So why is that? Some of the main reason of this is that Biden and his government is funding up the government hardly with governmental employees. They are taking up just building up the federals. That is not bringing more income in general. It's not bringing more revenues. It's just increasing the costs of everything. On top of this, all the different benefits that is going in, and I agree to many of them, we see a lot of them coming in. We have this in Norway, for instance, a huge governmental number of employees, and insane good social benefits, meaning that men, for instance, can be off work when the child is born, and women can stay almost 2-3 years without work, as government is having great benefits. Same thing is happening in US, and it is a good thing. At the same time, it's pulling people out of the workforce, and the workforce in US is the lowest it's been in decades and decades. There is, and I might be a little bit mistaken, but I think there is 7 million men outside the workforce as we speak. And these are just healthy men. It's just one of the way to measure things. We should include everything, of course, but it's from old statistics where they use this number, following this number. And 7 million is not participating in the workforce, because they either have income otherwise, either through benefits, or the benefits are higher than the revenue of actually doing work. We have many of these same issues in Norway. You can have social benefits and other benefits that sometimes make less incentives for work and makes it easier to stay outside the working force. So the working force is record low, meaning that there still is a tight working force. Now, interest rates is high, and the Fed need to slow down the economy. so the inflation is not running wild. If they tighten too much, unemployment rate goes sky high, and we are getting to the opposite side. And this is the negative thing to continue that thread. Fed has to do something. They has to do something about the debt. US has to do something about the debt, and they will have to do something with the pace of the economy. Now, if you slow down the economy too much, your ability to pay debt will be less. At the same time, if you keep too hard pressure on the economy, the interest rates will not go down, so that will also be a killer for the economy. We are sitting in a very, very hard case. And just as I said, just to be said, I think that interest rates will be much higher than people think. Yes, we will start maybe to have a cut or two, but I think inflation will remain very, very strong, because there will be more money pumped into the system. And then you can ask the question, maybe they really want inflation to be high, because inflation will eat up the debt. Happened back in the 80s, people bought houses, they were very expensive by that, but then inflation ran rampage. And your loan, which at one point was very expensive, suddenly became very cheap, because the inflation went crazy. So one way out of all the debt issue is continuous inflation. If inflation continues, interest rates continue to be high, there will not be a good situation in the stock market, because all margins for companies will be squeezed, and that will bring down stock prices. PE ratios are already way too high, as I see it, and most people see it already, because stock prices have been going up, but the general income of most companies has not gone up. Profit margins being squeezed in many companies. Some are still on the good side, but we see it across the board. Even companies that pay a very good dividend year by year are slowly saying that dividends might be under threat. So there is a lot of underlying things happening. So that's the negative thing which might happen, is that over the year, as we move forward, we will see that inflation will not go down as they think. Many people argue for it, that we have de-inflation, that will come in a situation where interest rates will be cut and prices will be cut, and that is a highly likely scenario. I think the opposite. I think that the stimulus into the economy will continue as we sit. So that's a little bit about the economy. On top of this, we have all that political issues surrounding. There is no way that 2024 is going to be a good year for US in terms of politics. I think it will be a disastrous year. You can read it in the news, and you can see it all over, that division is way too strong. And in worst case, it may end up, if not in civil war, at least with a big fallout, because a lot of things is at stake for the sitting government. They are trying everything they can now to hinder the front leader of the GOP, Trump, in all the ways they can. They are throwing everything at him to prevent him from running, and knowing that half of US is on that side, it cannot end well. And somehow that thing will probably lead upwards to what we saw in 2020. There will be a lot. There was a lot of election interference, and it will be much more as we move forward. How the population will deal with it is very hard to say, but there can become a major political fallout. I cannot say that there will be a peaceful transition of power, no matter what happens. In either case, I think it will be a messy year. And a messy political year means that there will be messy around all sorts of decisions. and economy is one of the things that people really feel hard and base much of their political decisions on, meaning that Biden and his government will have to push stimulus to avoid a total economic meltdown, because if that happens, it's guaranteed that he and his party will lose. There is age issues and there is so much more. It has to be a special year. So that's internal for United States, and US is the biggest market, and it will just be November is the election period. So according to this, we should see a lot of things happen, especially in second half of 2024, maybe even before, but I guess the last part of the year it will for sure be special. On top of this, we have all the military conflicts, and they are just keep escalating. Nothing good ever came out of all of these things. Russia is producing more arms than it has done ever, and they are ramping up, using more and more of their money into the war industry, and the war industry is hammering day and night 24/7 across Europe and US and more or less everywhere else, even China. And this arms race is not going to end well. And my advice, which was a few years, invest into the weapon industry, still remain very strong. There is money to be made, much more money to be made in the weapon industry, as we will continue to see escalation of violence. Now we have the Israel-Palestine conflict. We have things happening around Iran. Shots are fired at civilian ships, oil ships. One of the things that can bring the oil price up. Oil is currently sitting at $73, as I said, but more tension in the Persia, and we can see oil go for a little rally. I think it's a very huge chance that it will happen. On top of this, China said 2 times by the end of the year that Taiwan will be united with China no matter what. You can speculate if that means that they will military implement Taiwan into China this year or not. The odds are that it will happen, and US promised to stand by the side of Taiwan if it happens, so that you can just imagine the fallout yourself. So these are the negative things, and these are big lines. World is arming up. Nothing good will ever come out of it. We have crazy people in the EU Parliament arguing actually for going to war. That's how crazy it is. And everyone, even in peaceful little Norway, is arguing that we just need to increase as well. We need to be more aggressive. Nothing good will come out of these things. So it can be any given day a much huger escalation in the Middle East and Asia than we think. And the way to World War III is very short. It still remains short. Doomsday clock is at the highest level it ever been. And it's not to sound pessimistic, but it's just where we are right now. So these are the negative lines. We have to think about these things. So where will I want to be if any of these bad scenarios happen? Where do I want to be if we have a major correction due to all the debt issues in the United States and the Western world in general? If we have a major correction where the stock market will tank, the house prices will tank, where is my money safe? We know a lot of banks will go across. Still argues for having a portion into gold or other metals. I think it is a part. Personally, I will slowly move. I have some crypto. I will move a little bit away from crypto. I will have something. I think the first half of the year may be very good, so I'll still have something in the market, but I will also slowly move a little bit away from stocks, and I have to figure out what will I do to try increase my gains. Now, what are the good scenarios? Because nobody knows. That was just my guessing. What are the good scenarios? The good scenarios is, and I stated that last year, if we manage to broker some peace in Ukraine. that can lead to much more faster pace into good things happening around the world. We know the economy in Germany is suffering badly, and population is slowly turning. We had an overweight of left ideology in Europe and US, and that has led us to where we are today. The problem is that all of these things build up polarization, and then you often swing very much and way too far to the other side. And we see this also happening across many places. The right wing is moving way too fast, and that is not good either. You want to be somewhere in middle between these things. That's usually where it's stable. If it goes to one side or the other, it's unstable. If it goes way too far to the right, you will have less globalization, you will have less of a lot of things, and very often it doesn't lead very well. You need, as I said, to be somewhere in the middle with constructive politics, and you cannot do like we've seen over and over in many countries, breaching their constitution, and changing rules and adding rules. It's absolutely not good. But back to what are the positive things. So what if we get into a situation where inflation keep slowly falling? Last year ended somewhere around 4%. We know that the Feds wants it to be around 2%, or at least under control. If this happens and they slowly start to cut interest rates, stock market will continue to push upwards. And talking about the stock market right now, Nasdaq is at 16, getting close to 16,000 points, where its previous high. Either we break previous high and continue up, or we will have a double top if you know technical analysis like I do. It's a very interesting case, because if it's a double top, you will have two tops at around 16,000. Doesn't have to be the exact number, but very close to each other, 16,000. We know that the bottom was 10,500, and if you then have a double top, well, that will be a fall all the way down to 4,000 points. The major crack that a few economists have said will happen in 2024. Why do I keep coming back to negative scenarios all the time? Let's push back. I think it's because it's the overweight is actually on negative things happening in 2024. It's the overweight of all the analysis that I've done myself, and all things I see is the overweight is still on that side. We need the good things to happen, and if the good things happen, we broker some sort of peace in Ukraine, stop all that slaughtering of people on both sides, because it's just generations of young men lost as we speak. Front lines are still the same, and Russia have tons and tons of people to put into the battlefield. Ukraine is slowly running out of it, meaning that Europe at some point will have to send their young men and women to die for this cause. But if we are able to broker some sort of peace, we slightly have some interest rates coming in, cuts. I mean, stock market should continue to push upwards, and we know there is still a huge upside for certain technologies to come back in. And there is many stocks that have been hammered over the years, over the last 2 years especially, that has a huge upside. There will be a shake-up. Many companies will go bankrupt, and many big names went bankrupt. We had some big players moving up during COVID, and WeWork and all of these companies, they have been fading away, and much more of this will happen because we are in a situation where you get back to the true strong reality. Happened to green energy. Green was the word. We know all of this. Don't have to have a hurt feeling when I say that the wokeness was just way too much. It was totally ding dong, if you ask me. All this wokeness, this craziness, there is still some of it around, floating around, and we still see. But in general, it's finally getting back to reality, because in the end of the day, you can be as woke as you want, as ding dong as you want, but you have to pay your bills. It is just how it works. And we see that businesses being trying to go too far woke has been really hurt over last year, especially, and I think much more of this will come. Green is here to stay. I've argued for that many times, but it's overdone. They made green woke. Good idea, they made totally woke. And now we see a lot of countries are moving back on all these EV subsidies. They're moving away from their plans of replacing fossil cars within just a year or 5 years, because it's unrealistic and the cost of all of this is way too high. But it is the future. Green technology is the future. We will move there. But right now we had the first hype. Now it's falling back. And I think, in my opinion, and I stated this last year as well, argues for good buying positions. You just have to find which of these green companies will survive, which will have enough companies. We know that the green bus deal brought up by Biden, well spoken about, it failed, and many companies will fail, but some of them will make it, and it will be a huge future. And it's not only cars, there is everything related to green technology, solar technology, and all of these things. You just have to find out which one will make it through, because it will grow so much stronger on the other side. If I can't buy any company that I think will do, because I'm personally putting into green, expecting maybe to lose. As you know, I did some bets into NEO, been paying a little bit off lately, but I want to be in green because they will have a rebound. It may actually happen this year if stock markets get back on track and everything, economy is looking good. I think EV will be back for a boost again in a slower and much more realistic pace. By the way, the cost of lithium has had a minor crash. That is good news for EV because it makes EV cars much more cheaper to make. It's for the batteries, of course, much cheaper to make, makes the profit margins much higher. It will be very interesting to see how this will play out during the week and the following weeks, because the profit margins for Tesla, for NEO, Li, and all of these companies should, in theory, increase a little bit as the cost of batteries go down. Batteries being one of the highest costs in the EV. So we can have a situation where interest rates go down, stock market is being fueled, because when interest rates go down, there is less money to be made having your money in the bank or bonds or whatever. So money will flow back into the stock market. These are the good thing, and slowly we get back into P stocks. You can have a change out of some of these major world leaders with people that is much more realistic and have a much better approach to the big political issues, because now, like EU Parliament and all these things, is just sad to watch. But hopefully we can have that, and even NATO having changed their leadership, and we can get into better dialogue which can bring the world into a more steady pace. To sum up that, to make more logic about it, if we do understand that the economy is a glue, when things go good, people make money, we take more people out of poverty, etc. There is more peace. It's very correlated. Once economies goes down, violence increases everywhere. So yes, we may hate this country or that country, we may hate this or that, but the better we can work together and the smoother we can work together, grow economies across the world, the higher the chances for peace and lasting peace. When we start to break down economies, things often go very bad. We saw this happening in the 30s. And there are much similarities with today's situation was in the 30s. So let's aim for peace talks. Let's aim for fiscal responsibility, meaning that we do not pump too much money in to the different economies, overstimulating, bringing inflation back on a rampage. But as I said, just to be warned, it is one of the ways to bring down your debt, even for a country, is by inflation. We will see which one they will choose to combat that question. Now, 35 minutes into what seems to be a longer podcast, but it was the first of the year and the last 2 weeks of the year. I'm very sorry about that, but I got ill and didn't feel for making the last 2 podcasts. Week 51, I was no chance to make a podcast because my voice was totally gone with coughing, and during the Christmas I didn't have the energy, but I'm back on my feet again, and hopefully I will continue to give you your weekly podcasts telling you what I think. So these were the long lines for 2023. Both of these scenarios can happen, and anything that in between. There is, nobody really knows what will happen in 2023. But if we take these long lines, hopefully you picked up something. Some of it you will think it's far out and borderline crazy talk. Totally fine. But I urge you to think, what do you really think will happen in 2024? What are the long lines that you see, that you feel in your own economy? What are these things? Because you want to play the game short, and I will give a few minutes just to talk about trading as such. But you also want to hit the longer lines. So what are the things during this year, the next year? Because if you're able to get sort of into it, so we saw AI, how it pumped, and all who has been into AI stocks have been making such good money. Before that, when crypto was going up, it was graphic cards and the graphic Nvidia and all of these things. So you just have to find the major trends. If you think that interest rates will be cut, it will have a consequence, but where will that consequence be the very best? Because that is where you want to invest. So even if you didn't find any of the things that I said appealing to you, logic to you, or whatever, still urge you to think about the long lines. Invest accordingly. If dollar is slowly turning into toilet paper because of all the debt, where will the money be put as a safekeeping? Will it be gold? My bet is gold. I might be wrong. So far I've been correct, but I might be wrong. Gold may fall back, but over time gold been doing good. We know that a lot of central banks around the world has been buying up gold. If you think there will be huge issues around Iran, because that tension is just building up by the minute, what will happen if there is anything with Iran? Just imagine what will happen with oil. Maybe oil is where you want to be. At the same time, if the economy is slowly getting worse and worse, as we see many places, the demand for oil will be less, and oil prices could actually plummet. And just to finish that oil argument, OPEC and especially Saudi Arabia said that because these kind of oil prices that we have now make shallow shale production profitable in the United States. There is different production. Asia and especially Saudi Arabia have the lowest production cost of things, and then it just moves upward. North Sea of Norway has quite low production cost, but is still above Saudi Arabia, and the shallow sand is one of the most costly production methods, but they make money with current oil prices. Saudi Arabia have said, they have done it before, that they might flood the market to kill off the excess business, oil business, which only survives because of the high oil prices. They said that they might do that. It might happen, and that can cause oil prices to plummet to $20, and it will cause a huge fall in oil shares. Can go both ways. You have to do the thought work yourself. About trading, before diving into that, I'll just give you a few small tips. and we will do, of course, the $1,000 challenge. I will update you on what happened on the $1,000 challenge before ending this podcast that turned out to be a long one. About trading tips in general, because many of you you listen to this podcast, you get a few tips. You heard that I went into repair therapeutics before Christmas, trying to double the money in the $1,000 challenge. So you are scanning this podcast, trying to figure out what are the stocks, where do you want to be? Is it NEO this week? Will it be Chevron? Will it Boeing? Where do you want to be? So that's where you are, because you want to start a day, trading day that starts in a few hours. You want to just trade. Yes, we can find a few stocks that probably will do good, but in general, here is a few tips for you when you trade, and you trade intraday, because a lot of people do that, and many of you do that with gearing, and you do it intraday. You buy and you sell just a few hours later, or even minutes later. Some common rules which works very, very well. One, it's round numbers. If your stock, let's say, is 12.10, usually buying around 12 is a good case. You want to, if it breaks down to 11.95, you want to sell it because 12 is broken. I'm talking about support resistance. Works very, very well. So whatever stock you are in, if it's close to a level, now let's say it's 12.50, it's not an obvious buy. And if it's 12.90, getting close to 13, it's usually a sell-off point. Then you usually will have a push, trying to push through 13, will fall back maybe to 12.50 or 12.70 before pushing up. So very often a good way to reduce your risk is to buy or sell when support resistance levels are broken. Very often they are around round numbers. Just watch for yourself and you will see how correct it is. So if the stock, if you want to buy, the stock is your best buy will probably be around a round number on the upside, meaning that if the price is 12.10, so anywhere just upside 12 will be good. The hard trader knows that the stock usually breaks by a little. It breaks down to, let's say, 11.98 before pushing up, and you are able, but it will just be a few trades, and you're able to utilize that super tiny margin, because we very often see a slight break before it goes up. If it breaks too far down below 12, and there's many methods to figure out what is really way too below, because you can use like 3% or 1%, or you look at the change during the day, how much is moving up, and you use 5% of that change. Now let's say the price is up a dollar, so like 5 cents change will be. So if it's moving between 12 and 13, so 5 cent under 12 will be the support, the last level where you want to put your stop loss, like 11.95. That's if it falls below, it will just continue further down. So that is where you want to be doing. So we have this, and if it goes up, you're sitting in a good position. It's heading upwards to 13. You have a little profit. Usually it comes up to 13, maybe 13.1, 13.02. Then it dips down and goes for a dip, maybe back to 12.50, 12.70, and continue upwards. And these movements are best if you have a good trend. In general, if it's in an uptrend, you know that it will dip down to 12.70 and then continue upwards, break 13, maybe continue upwards. But if it's in a downward trend, there's a high chance that it reaches 13 and it will just move down, and then a little up and then continue down. So trends will be your best friend for sure. That is how you will make the best of your money. There are other support and resistance level. Trend is one of them. You draw up trend lines if you have that sort of chart software, and you use this, and you will see that there is almost a sort of magic how well it works. But because a lot of traders do this, and you can use candles and other things, and we might get back to that. Accumulated volume is one of my top favorites. You find it at Stock Invest. When you look at chart, and you will see some gray bars at the right hand, these are accumulated volume. It works, in my opinion, it's the absolutely best of them all. If there is a lot trades around 12.50, and the price is 13, it just means that 1250 is a heavy support level, and if it comes down there, it usually bounces up, and this is how you can put your trades. 45 minutes, it's time to wrap it up. So what about the $1,000 challenge? Well, you will know now, because I went into Repair Therapeutics before getting sick at 5:35, saying that I wanted to double. At that point we were up only 15% in the $1,000 challenge. I wanted to do a little crazy trading before Christmas to try double the money, so we would go up to $2,000. We started, I don't remember if it was August or September I started the $1,000 challenge, but to double the money by the end of the year, because we were playing a little bit safe. As I told you, we'll increase the risk a little bit. Repair Therapeutics is currently sitting at $7.3, up $36.45 since we bought it, making more than 50% return in the $1,000 challenge. I didn't manage to double the money before Christmas, and I will not give any good excuses for it. I did not do it, but I will continue to grow the $1,000 challenge. Now we are sitting far better up. We are at 1,685 or 6. I'll have to check, and I will try to post image either today or tomorrow where we are at the $1,000 challenge, but slowly we will split into 2 stocks, but not yet. For the week, I will try to get out of Repair Therapeutics, get my focus back. As I said, I was a little bit sick before Christmas, not having the proper focus, but my plan is to go out of Repair Therapeutics. I still think there is plenty of upside, and give you the next candidate which I will buy. And I will try to remember to post on the YouTube video when I sell it, and I will tell you before buying any new stocks. If I sell Repair Therapeutics today or tomorrow, whatever day, I still will not buy the next stock before I tell you upfront which stock I will buy. So if I sell this week, I will tell you next Monday which stock I will get into, so you always know up ahead. I believe that will be it. User asked me how the metal detecting was going. For those who are new to this podcast, I have a few hobbies outside, and sometimes in the YouTube version of this podcast I show images of my finds. On New Year's Eve I had the chance to go for a few hours detecting, and the very first signal I got was a ring. Super happy about that. It was not valuable at all, and I might even post a picture on the YouTube video so you can see the ring. The stone was lost. You can clearly see where the stone was sitting. The stone was lost, and the ring is not of expensive metal. It's for sure not gold. It's probably some sort of alloy, brass or whatever. I haven't cleaned it properly. I will do later. But so funny to find a ring. I started the 2023 with a super nice silver coin from 1/12 Saxon thaler from 1720. And on the very last day of 2023, I found a ring on the absolutely first signal. During the day I found several coins, but nothing special, and some buttons and some lead seals and a few things. All of them were from early 1820s all the way to 1920s, so the ring should be 100 years plus old as well. That's all. 50 minutes, the longest podcast in a long time. I hope you enjoyed it. We are heading into 2024. I can only wish you the best and the absolutely best of the year. Have some goals for the year. Find some goals that you can reach. And hopefully tune back next Monday for the next episode of the podcast. For those who have been with me for now 4 years, heading into the 5th, thank you. I love you a lot. So happy, and I hope over these years that I have managed to do the one thing I put as a sole purpose of this podcast: reduce your losses, increase your gains. If I was able to do that, I would call myself successful, because I'm not making any money on this podcast series at all. Now I will be heading for lunch, and in a few hours market will open. The week, there's a fair chance the week will be green, because there is still a strong momentum from last week. Prepare for an exciting year, and next week, this week, I hope the portfolio will be greener than by the beginning of the week. Until next time, just have a super week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information, you agree and are held liable for your own investment decisions.